One, two, one, two, one, two, testing. No, now it's better. Good morning, Rahul. How are you? Good morning, Tim. One, two, one, two, one, two. Yes, my microphone was disconnected, guys. Good morning, Juan. How are you? Said. So here's my plan today. All right, awesome. So let's do this, right? I'm looking at Euro US dollar shorts. Our price came about, I think, a pip and a half from my entry. Less than a pip from my entry. I am not filled short yet. Mm. Here's that trade. I'm not filled short yet. So I'm just waiting, guys. I'm just waiting to get filled. And also, I am looking for possible USD-CAD longs today. But this particular setup is not as optimal as the Euro US dollar short, right? Now, on the DXY side, so we got a clean break of the Asian session highs. This to me is quite bullish. So my bias for today is bullish. What I'm waiting for is for price on the DXY, the US dollar, to come back here towards this level. Now eyeballing it a little bit towards this level for an upside continuation. So my plan is, or I am waiting for the liquidation of these lows on the DXY for more upside continuation, which means that it is exactly the same setup that I'm waiting on the Euro US dollar, right? This is a US dollar play. This is a US dollar play, right? I'm waiting for the liquidation of these highs, price to fill me in on that imbalance and a continuation on the move to the downside, which means that, which is exactly a, a bullish position on the US dollar. So that's what I'm looking at today. Remember, we do have CPIs today, right? Or let's have a look at the economic calendar. So if you want to chat, just subscribe to the channel, guys. It's that simple. Yes, we have CPI at 6:30 a.m., so in about 4 hours and a half. Good morning, Carl. How are you? Mm-hmm. Yesterday's pound short, failed to fill me for about a pip and a half. That was, yeah, that was a bummer, but it's fine. Now, everybody loves gold, so why don't we have a look at gold? Pretty non-directional to me, so I'm not trading gold today. The data shows me that because the way that I look for daily biases is, on the breaks of the Asian session high at lows and on the fake outs above the Asian session high or a fake out below the Asian session low, right? A clean break of the Asian session high signals me a bullish continuation for the day, right? A clean break of the Asian session low signals me a clean um, continuation to the downside, and a fakey above the Asian session highs. It's just a reversal short, etc. Right. So when price is when the London session trades within the Asian session range, to me this is non-directional, and I am not actively looking for trades in these markets, right? Because the probability of success of my entry model with a non-directional market decreases a ton. So this is what I'm looking at, and if I get filled, right, I'll probably, ride most of my position towards my targets, but close about 70% to ride it down towards the extreme lows of the move. This is exactly what I'm looking at for about an 8R, right? So let's wait and see what happens. I'm currently short GJ. That was an amazing trade. So you're short GJ from where? From these levels, right? There's a ton of imbalance here. Let me show you a little trick that I have. I'm gonna show you a little trick that I have on how to spot real imbalances on these candles. But let me finish with my thought process on everything. What do you think about GBP CAD? I don't know. Let's have a look. GBP CAD, GBP CAD. Well, um, we had GDP, out of the UK. So everything is very bearish on the pound side, and to me, yeah, of course, that the correct idea would be to actively look for shorts in pound, markets, but just because of how strong this move was. I don't know if I have an optimal setup. Let's go to the 1 minute chart on the pound yen. So here's a big, big, big imbalance, right? So let's have a look. This candle right here, the 1 minute candle that broke with the Asian session lows. Here's that imbalance, right? Very clearly. So let's grab that, fixed range volume profile. All right, so I'm gonna move it towards this candle and this candle alone. So here's that imbalance, right? Yep. So this little trick, I really dig it because I'm gonna show you, right? We are looking at the volume on this candle alone. Here we go. On this candle alone, right? Here's the volume on this candle alone. And all right, so status line and hold on. What I want to show you is this. Yeah, no. Why can't I grab this? All right, volume profile. Here we go. So let's look at the actual, volume within this candle. We're going to look for this, and we're going to go here. So let's go 15. So here's the real auction that happened in this 1 minute candle, right? When the news hit the wires, of course. And as you can see, right, the real imbalance here is from this week low, right, towards this level, right? There was absolutely no bids here. So this is an inefficiency in the market, and this is the level that I would most definitely look for shorts in the pound yen. So let's have a look how this looks, really. This is how it really looks. This is where I will look for shorts, and as you can see, it's right there. But again, stop losses would be above, and this is the reason that I'm not going to take this position, because where am I going to put my stop losses, right? Let's go back to the 3-minute chart. Here's that imbalance. I mean, this is the entire 3-minute candle, but we already saw that. The real imbalance is here. So where my stop losses should be placed, right? Where my stop losses should be placed if I were to look for shorts here. I mean, there's no structured high, or there's no protected structure high or a strong high that I could place my stop losses at. So yeah, even though inefficiency wise, this is a very, very good setup, market structure wise, it is not for me. Short formation session highs, man. Amazing. Here, So what you did was a little bit gambly, in my opinion, mate, because you front run GDPs, UK GDPs, but to each his own. Go back to the Euro USD. Still waiting for this. Still waiting for this corrective move. And as you can see, this is very clear that we're still in a pullback because of the lack of momentum to the downside, right? Impulsive moves tend to be very, very clean once all the weak players in the market have been liquidated, right? And the market prices itself efficiently at last. So, I am going to look at that running when I finish here. So USDCAD, nothing to do here. New Zealand dollar, US dollar. I don't trade, the Kiwi or the Aussie too much. And again, non-directional for me today, and non-directional for me again on the Aussie side. I will wait for a change of character on 1 minute and wait for a break of structure, then enter the trade. You can use high where character changes as protected high. Yeah, of course. I understand. Yeah, I mean once you spot the real imbalance, what one is talking about is quite good actually. So let's imagine this, right? London session highs, liquidity. So we get that break and that print on that imbalance. So what Ron is talking about, this would be the last triple the highs. Then we could see price coming down here, break with these lows, shifting the structure or the immediate structure in the market from this bullish pullback to bearish impulse, right? And of course that this is where we would look for that imbalance for a pullback and a continuation lower, placing stop losses above this possible new high. But that is not my jam. Yeah, I mean it's a very good thought process, basically what we do here, but on the 1 minute chart. But again, I really don't like it. Gold up to 1915 first, then down to 905. First then can touch if CPI favor till 1880. Yeah, I mean I don't front run high impact events, but when it comes to CPI, I mean CPI is the only high impact event that I would actually trade, because let me show you actually, because when it comes to CPIs, right, we only get CPI data, so it's very hard for the data to be mixed, even though we might look at mixed data from month-over-month data to year-over-year data, but the markets focus on the very short term. So when we get very high impact very high impact news that only that the data dumped is only, my mouse died, damn it, that the data dumped is only in this case CPI, the moves are going to be very clean, and it is tradable. No, I mean non-farm payrolls to me is trading the actual data dump is burning money, because we not only we get non-farm payroll numbers, but we get unemployment numbers, we get average hourly wages, and then the data can be mixed, which makes for a very choppy price action and super volatile. So yeah, I'll possibly be live for this for the US CPI later, right? And my battery on the mouse died. Damn it. It was not gambling, but it's my entry model. I got change of character. No, I mean, yeah. When I say it's gambling, it's because you know, when it comes to high impact events, volatility does not respect, market structure, or, the market structure that you're trading. For example, here you had, you had the good luck of the data out of, GDP, UK GDP being, missing, expectations. So the GBP, so the pound crashed, right? But no one knows, and you most definitely didn't know that GDP, UK GDP was going to miss. So that's what I mean. That, in my opinion, was a little bit gambling, holding on to a trade very close to your entry, through such a high impact event. What do you think about USD Japanese yen? ABOB, how are you, mate? US dollar Japanese yen, non-directional for me today, mate. Again, very, very choppy and non-directional, as you can see here. Um, you know, Very, very, very narrow London session range, trading within the Asian session range. Yeah, I mean, not looking at anything at all here. USD CAD. So here was my idea on the US dollar Canadian dollar, right? I was looking at this particular level for longs on the USD CAD, right? So this would have yield. I don't know. I'm uncertain if I am going to take it. So this might yield a 7R, right? Any trade today? Yep. I have a pending order on the Euro US dollar, made. Here is that pending order. It's an 8R. Stop losses are just about 5.5 pips. I know it sounds crazy, but I trade the very low time frames, and the particular protected high that if price breaks with would invalidate my trade idea or my setup is this one right here. So that's why my stop losses are where they are. With my stop loss on break even, it was risk free. That's why I didn't mind. Oh, okay. I didn't know you had a break even stop loss. But you understand what I was saying, right? I mean, I'm not judging you or anything. I'm just, sharing my thoughts. I stopped out of Aussie CAD because of my spread at 21 GMT. Oh no, ABOB, that was crazy. That Aussie CAD was an amazing trade. So yeah, that Aussie CAD. I don't. I mean, it didn't quite fully recover last week, but about 80%. That trade alone. So this US dollar CAD is, yeah, the one that I'm hunting at the moment. Unsure if I'm going to take it. The reason, quite a few reasons actually. I'm going to talk about this, right? So I always tell you that I look for direction on, on the volume entering at, the London session open, right? But all right, I'm going to ask you a question. Is this a break of the structure, a real break, or is this a fake out, right? I'm going to leave it here for you guys. Is it a break or is it a fake? To me, this is a fake out, right? So let me just delete this and this. Now, unlike the Euro USD, no, to me it's not a real break, mate. Unlike the Euro USD, right? Unlike the Euro USD, I mean, I like to, my entry model and the entry model that you trade can yield a ton of setups every single day, right? And it's very easy to get complacent in the sense that it's very easy just to start trading with leaks and on optimal setups, right? I'm talking about me. So, mining the data, right? I realized that for me to consider, a break of the Asian session lows in this case, right? A real break. I I'm not only looking at, the volume pre-market London, right? I'm looking for a break of the structure too. So this signals to me that more downside continuation has a higher probability than a reversal. On the case of the US dollar Canadian dollar made, right, on the case of the US dollar Canadian dollar, right, I'm not going to place my buy limits, right, because of this. There was absolutely no break of the structure, and we had a massive, massive, massive bearish momentum, right? And if you notice what happened here, right, this is another entry model that you might want to pursue. Trading fake outs above the Asian session high is quite simple. You look for this particular setup, right? A break, a break of the highs in this case, right? Trapping breakout traders, of course, trapping breakout traders, right? Taking all of this liquidity. This is just a liquidity sweep, right? And then you would look for, again, a very, very big and volatile move to the downside, a bearish move, leaving a big imbalance, right? And you just wait for that particular imbalance to get hit, right? And for more downside continuation. Yeah, one must be careful with, actually reading market structure because, this entry model is all about, bias, right? It's all about bias, and it's very, very, very easy, you know, to get confused on what a real breakout or a fake out is, right? So this is bearish, at least for the short term, right? So looking at the Euro US dollar, this is the only trade I'm going to take today, I think. We do have CPI data expected to be higher, at least the CPI month over month, and the CPI year over year being higher than last month. My mouse is dead. I'm going to use the mouse of my laptop. So this might be, bullish for the US dollar, which would in fact be bearish for the Euro USD. Right, so yeah, you have any questions, guys? Because if you don't, I'm gonna cut this show a little bit short. There's no action today in the markets, so no need to stick in front of in front of our charts. I'm just going to record the video for the VIPs, right? So you might want to listen to what I have to say. All right, everybody, how are you? I am still looking for these shorts on the Euro USD. Now, let's go here to have a look at the DXY. The US dollar currency index to me is quite bullish. We got that break of the Asian session highs and a break of the structure, signaling that the upside in this market has a higher probability than a reversal. So I am waiting for this weak players in the market to get liquidated, price to hit this imbalance and then continue higher, which is the exact same setup that I am looking on the Euro US dollar. As you can see, we got that break of the structure, then the break of the Asian session highs, and again another break of the structure. So the probability of a bearish continuation is much higher than a bullish reversal. I am looking at price to hit my imbalance. These highs are the protected highs that if price should break with, invalidates my trade idea. This is a very, very tight 5.5 to 6 pip stop loss. And on the VIP signal, right, my targets are here, right? And because I've moved my entry lower, now the real risk to reward ratio on this trade is a 5.2 R, right? But if I get filled on this position and price, continues on the short side, I might take just, not just, but 70% of my position here and let the rest of it ride towards the lows, the very lows, that liquidity to the downside for about an 8R. So that's what I'm looking at. I'll keep you guys posted. Yep. So that's me, guys. Thank you for joining me. I'm going to be back for the CPIs. So stay tuned, and yeah, I'm going to leave you a few minutes for you guys to ask me any questions. And if you don't have any questions, I'll just log out. So what's up? You too, buddy. Enjoy your day. Trade safe. And I really don't see, markets moving too much before CPIs. Yeah, there you go. Why don't we have a look at this pound yen? Just for the hell of it, we might actually get a setup here. So where would it be? Where would it be? On what risk to reward ratio do you say that trade is good enough? I don't take anything below a 3R. Never take anything below a 3R, mate. That's just that's just the math behind my entry model, right? That's how it is profitable. You are not trade WTI? Nope, I don't trade crude oil, mate. I'm not a crude oil trader. So very interesting, right? The pound yen hitting that volume imbalance. We might get that particular, setup that Juan was talking about. But again, this would be what I would look for. And yeah, some traders would look at this low as the possible change in character or shift or market structure shift, right? But not me. That is a very low probability, change of character zone. But yeah, it's looking good for more downside impulsive moves. All right, so thank you for joining me, guys. Have a great day, and I will see you in about 4 hours.